Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. We are back with Jonathan Twomley, and we are going to have a conversation about inflation is dead. It is over. The Fed has killed it. We got a great CPI print, and now we can all just go party like it's 1999. How you doing, Jonathan?
I'm doing great, Michael. I love that introduction.
So what do you think, man? Inflation's officially dead. We got a 7.7 reading. It's not over 8, it's not 9, it's going down at a faster rate. Victory, right?
Well, let's say we haven't won the war yet, but we've won a big battle, I guess, right? We've made a bit. I mean, look, it's going in the right direction, right? And it's what the Fed wanted to happen, may be happening. I mean, still a little too early to declare victory, but it's certainly better
Oh,
than
just a little bit. 7-7, still a little bit.
it's still better than the alternative, right? I mean,
Oh, absolutely.
yeah, and just reading the news this morning, I didn't see that print, but I did see that say like in Ireland, which it's part of the EU, the inflation print just came back as rising. It's over 9, right?
Wow.
So and I'm sure it's higher in the UK. The UK has had real problems with it. So as we know, the ECB and the Bank of England have not been, they've been getting more aggressive, but they haven't been as aggressive as the Fed has been. And so I think you can see the differential between what's happening here and what's happening there. They're going to have to tighten more in Europe, and I think they're really much more worried about a recession than we are. So they're having a little trouble, tightening as much, but they may be forced to, and especially when they see what's going on here. But I'd say here, I mean, look, this is good news. All the people who said, I mean, listen, we've been seeing a lot of stuff recently where people belly aching about, the stuff that is causing inflation, the Fed has no power over. It's not going to, all they're doing is killing the economy. Basically, you're hearing a lot of belly aching from people who like need cheap money to make money. And they don't like this. They're fine with inflation, because they want to have their assets continue to be inflated as well. But it looks like those guys are wrong because it is having an impact. So this is
Yeah,
good.
I think there's a couple of things. Yeah, what I would tell people is, hey, the Fed's having a good day, right?
Mhm.
The Fed finally had a number go their way.
Yeah.
I think you can say a couple of things. I think the trend is clear, at least in headline. I think we've had 4 months in a row going down, but it's gone from 9-1 to 7-7.
Yeah.
That's the trajectory. Something else that's also important, I think there's two other things. One is it appears that the rate of change may be accelerating.
Mhm.
Knowing the numbers and the base effect and all of those things, I think we may have a couple of good months ahead because we're kicking off bigger numbers going forward. So we may see this trend continue. It kind of, my rough math gets us to about 6% headline, kind of the base effect changes over the next 3 to 4 months. We still have a lot of work to do. Still have a lot of work to do. Second, I do believe, because I was up at 5:30 when the report came out, and I've changed my opinion now about the rate increase on December 14th. I've changed my opinion from 75 to 50. So we will get the Fed slowing down. I want people to realize that 50 historically is still a pretty aggressive move,
Mhm.
right? We have just been used to 75 4 times in a row. But yes, it's fair to say that the trend is clear. We hope the rate of change continues. And if a Fed pivot suddenly means Fed slows down, I think you're going to get your wish. What do you think about all that?
Yeah. Well, I think this would certainly give the Fed cover to not increase rates so aggressively, right? And to the contrary, they may also get a lot of flack if they continue to be so aggressive. But I think I would agree with you in the sense I think it's going to still be at least a 50 basis points hike,
I
right?
think they have to, yeah.
And maybe even possibly still 75, just because I think that they have kind of drawn a line in the sand and they want to show that they mean business and that they can't be manipulated by just like one good print, that they kind of have a plan, right? And they're going to execute the plan and that they're right, right? And Wall Street's not. So like you said before about, I think they want to break that Fed put, they want to break that
Yeah.
that psychology, and I think that continuing to raise rates is really the only way they do that. So,
Mhm.
not to mention the fact that, I mean, I think, interest rates are still by historical standards low,
Mhm.
and um, and as long as there's still some inflation to beat, I think they're going to continue to use that to get interest rates back up to, a normal level. And frankly, if they do that, if they get the interest rates up to a normal level, and they don't cause a recession, I mean, can you believe like what heroes they're going to look like? I mean, it's going to
Yeah.
be, they're going to look like, Powell's going to look like, they're going to be, books written about him. He'll be on the same level as Volcker, you
Yeah,
know,
exactly. Yeah.
you know, he'll come
Yeah,
out.
the other thing that I think happened because of this reading is there was a growing trend because I think the market was set up for another bad reading, right?
Mm,
And I think we're actually having a short covering rally right now, but that's a different. That I'm not a stock guy, but that certainly feels what happens. Everybody had puts, and we're selling short. Uh, but I think what's happening is I just got a note from a mortgage broker because that's what I do early in the morning is I text mortgage brokers, and he's telling me that he thinks that rates could be down half a point by next week
wow.
because banks had so much margin. So I think the terminal rate is coming in. Uh, I think there was increasing talk. Even Mohammed Alarian was saying they may have to go all the way to 6. He said it wasn't his call, but he said it's possible. Given this reading and the rate of change, I stick with my 5. I think they got to get us to 5. And the other thing is we were having more and more people just kind of leaning into this fact that they thought mortgage rates were going to get to 10%. I never saw it. Could we get to 8? Maybe. Could we still? Maybe. Um, but there's a chance we've seen peak rates, right? If the Fed gets to the rate because we're already at 3 3/4, another hit 50 gets us to 4 1/4. We're almost there. This thing could almost be done. We could be on that plateau for a while pretty soon.
Yeah. Yeah. Um, yeah. I mean, I, I agree.
Yeah, yeah, no, but this is
I-
all good news because what we need certainly in my residential space and your commercial space is we just need rate. We need to get to the terminal rate,
yeah.
right? And we're going to be on it for a while, somewhere between 9 and 18 months minimum.
Yeah.
And that's okay. We can deal with that.
Yeah. I mean, I think that what the markets want more than anything else is to understand what interest rates are going to be, right? And
Exactly.
not to have all this uncertainty. And I think the good news in this number, is that it makes it seem like the for a while it looked like we are just going to keep on raising and
Yeah,
raising and raising and raising and raising and raising,
exactly.
and nobody,
Never ending raises. Yeah.
never ending raises, right? That's what it I think people were afraid of, and it just made it very difficult to underwrite anything. And investors, the mindset of an investor is it doesn't matter what the interest rates are, right? Interest rates are irrelevant. It's just the cost of money, and you're going to underwrite according to what the cost of money is and bake in your return, and that generates the price. Right now,
Mhm.
it could wind up where what you need as a buyer to make money and what the seller needs as a seller to make money don't meet in the middle, and then you have a market that kind of you
Yeah.
know
Locks
seizes up.
up.
But that and nobody really wants that. But that's not like necessarily bad in an economic sense, right? It just is something that will eventually work itself out. Um, but you don't really care. You don't really care, right?
Agreed.
So um, the so I think we're getting to that point now where people may be saying, okay, we know what the new equilibrium. We're getting closer to knowing what the new equilibrium is going to be, and then everybody can reset their expectations. And frankly, I think what you have going on right now in the market, and we'll talk about this a little more in the next episode, is buyers looking at the market and going, we don't know where interest rates are going. We don't know how we're going to exit this thing in 5 years or 3, whatever our hold is. And sellers all holding out for like this Fed pivot where the Fed is going to realize it overshot, it's going to cause a recession, and they're going to cut interest rates back to zero. So they're not selling because they're like, oh no, good times are coming back. And I think the good thing that will happen if the Fed does slow down is that people will start to get realistic on both sides and say, okay, we know where things are, and this is the new reality, and we're just going to have to make decisions according to that, rather than on what we hope is going to happen or fear is going to happen. So I think that's all that's all positive.
Yeah, at the end, so kind of wrapping this up again, folks, inflation is not whooped, it is not beat. Did the Fed have a good day? Absolutely. We should all we should all enjoy it. It's been a while since we've had a
Yeah.
good day with rates, but they haven't. There's more to be done. I will say we're closer to the end than the beginning, which is cool. Jonathan, where can people find you?
Yeah. So I am found in many places, but I have kind of like a big announcement. I've been hinting at this for some time, as you may know, but I'm now within a couple of weeks of relaunching my whole platform under the Apartment Investors Club brand. We have a brand new Facebook group starting up. We're actually folding my 12,000 member Facebook group, and we are restarting because we want to just have a smaller engaged group rather than a group that has a lot of dead weight in it. You know, these Facebook groups tend to attract a lot of people over time who just sign up because they think, oh, I'm interested in that, and then they don't engage. So we're getting rid of all the dead weight, and if you want to be part of the brand new thing that we've got going on, get on Facebook and go to Apartment Investors Club, and you can get on the waiting list to join. You do have to answer the questions that are there, but if you do, the great thing is that you will get added to my email list. If something you put in your email list, you'll get added to my email list, you'll get my free download. And once we open the group up, which is going to happen November 21st, I'm going to share my screen and show you what you're going to get.
Nice.
One of the things you're going to get. But you are going to get I hope you guys can see this. All right.
Yep.
Yeah. So this is just the cover page of the first video in a 4-part video. Oh, sorry. You know what? This is not. I am totally sorry. This is not what you're going to get at all. I messed that up. Bear with me for a minute. I am a little confused. Where did it go? All right, here we go. This is what you're going to get. All right. You are going to get a free video series on how a syndication works. So I'm going to lay out the entire, not on high level, so this is not going to overwhelm you with information. But if you've ever wondered exactly how a syndication deal works, this is going to teach you exactly how it works. You're going to get then a second video that explains how you get the best deals from brokers. A third video about how you actually raise money from people. And a fourth video about some kind of mindset issues around successful investing as a multifamily investor, if this is something that you're interested in and you kind of feel a little overwhelmed by. So be sure to go to Apartment Investors Club on Facebook and fill out the questions there, add your email address if you want the free download. Be sure to agree to the group rules. If you don't, the bot's going to kick you out automatically. So be sure you answer those questions. And in 2 weeks or less, actually 10 days from now, get in there and be able to get this video and start engaging with me in a newly revamped, re-energized group. So look forward to seeing you there.
Awesome. Thank you. I look forward to it.
Absolutely. All right. Take care, Michael.
Take care.